So, yesterday, Fed Jerome Powell party. Today, Jerome Powell hangover. Yes, this is how it looks like. It looks like, or let's say it this way, it doesn't look good, okay? It doesn't look good at all currently. And if you're looking at the market, you just can't just can't comprehend what's going on, right? The only thing that I'm currently is like most of the time laughing. I mean, even when it's not funny, right? I mean, the market loses billions, and there's a couple of reasons for that. First of all, there's a lot of hedge funds, institutional funds, big investors that don't want to mess up their end year performance. Those are mostly performance guided transactions, and you have to understand if they made, like, let's say 50% towards the end of the year. They don't want to, let's say, make this bet when the stock market goes down in the end of the last couple of days, so they can still say, hey, I made 50% or 49%, whatever it is. So they are selling off. Then we're having all of this other, there is, let's say, the Fed that came and told us what they will do, which is a relief, as we have seen yesterday. But it's still, there's a lot of, let's say, question marks into the market, right? What happened with this health situation? What will happen with the rate hikes next year, when they will be done, okay? Even though the first, let's say, relief moment is done with the Fed, still the question remains, what is going on with the other part of the business, right? So it stays super interesting. I cannot wait for next year. If it stays this volatile, I can definitely brace myself. But the question is, okay, what is happening with the money policy that we got yesterday? And I think what is, as important here to understand, okay, what does it mean for companies like pre-revenue, like Virgin Galactic, that has a lot of revenue in the future, okay? For that, I would like to show you the following thing. First, we need to, here's the market, by the way. We are with space at about 3% down, still fighting with the $14. So we still have opportunity to buy for $14, market cap at around 3.7, which is the nice thing about that. Obviously, you can see here the trend line is going down, but here, as more as the stock goes down, as more also the 50 moving average comes down. So with the, hopefully a relief rally at some point of time, we can maybe see some, great opportunities here to, go bullish. However, let's go into something else. I want to show you first the rate hikes. Okay, so now it's the questions, okay, when the rate, should be hiking over the next couple of years. And here you can see the dots. Each dot represent a representative person of the Fed. The Fed is up out of a couple of people. That there's like a commission of people. And so actually, here you can see the votes, and they are saying even 2 to 3 upgrades of the interest rates should be done by next year. This is what the people think. Then by 2023, most of them thinking that the rate should be closer to 1.5 to 2. Then 2024, most of the people are quite the let's say field of decisions are quite bigger. And then the longer run, here you can see where they are quite off in a line, should be somewhere around 2.5%. This is the rate where the people, the institutions, the banks can lend money from the central bank. And that means, if the times are hard, then the banks and institutions can lean or lend money for very, very less costs, and other way around. Now, unfortunately, what is happening usually, that all of this bubbles, dot-com bubble, housing bubble, and now inflation bubble, or how you call it, next generation bubble, I don't know how you call the next bubble, but or asset bubble or equity bubble, right? Because everything is going up, houses, crypto, stocks, equity, everything is going up. So the question is, what is here the right word? However, the problem is when those rates are going higher, those are usually, kind of combined with, let's say, crashes. I know, the word is pretty hard, but we need to have a look at what happened over the last couple of years. Specifically, those years 2000, 2009, and so on. So here you can see the rates rose towards 2000, then came the crash, and then the rates had to be lowered, otherwise the whole thing would be blowing up further, okay? Here the same. The rates are going up towards the housing bubble, and then it's break down dramatically. And we do it again. So all in all, it's always the same process, guys. Rates going up, some bubbles are bursting. Rates are going down, some bubbles are inflating. So this will be the question. The whole point here, what I'm saying is what this means for Virgin Galactic. For Virgin Galactic, usually as more money is in the overall stock market is better, because as more money comes into the market, as more people are thinking, okay, we put already a lot of money into, Apple, Dow Jones, all of these traditional things, Microsoft, Tesla, whatever. And now we're looking for companies with a great story to tell in the future. Okay, so those stocks are getting inflated. Like companies, you saw it on the very, very much, kind of field where a lot of companies that didn't have any revenue yet, like Lucid, great company, yes, but no revenue. Virgin Galactic, no revenue yet, and so on and so forth. So you can see here a pattern where the people are actually seeing, okay, what's going on. I'm thinking to place some money, so they placing it into story stocks, and those story stocks are actually Virgin Galactic as well. So actually, if the rates are rising, this is not so great for Virgin Galactic. What does it mean? This means potentially that we can see even lower numbers for Virgin Galactic stock, maybe the 10, as I mentioned in one video, okay? By the way, if you are following my channel, you should watch this one video that I posted, and it's exactly about this topic as well. And this is the following. Let me just have a look. Here we go. If you go to my channel, you see the recent video here, which is you should have sold space at $60. A very, apparently very, good video here about what is the mentality, right? So think about it, to watch it afterwards. I might post it here for you guys. Can I share it? Let me share it real quick. I will put it into the chat so you can have a look later on. Yeah, don't also forget, if you want to get 50% off of our masterclass / lifetime Discord access, which is x10masterclass.com, and then put in the code 50 thanks, and then you can get 50% off of the current course and lifetime Discord access. So enough. I'm believing that you can really now see that times could get tough for exactly this growth stocks. More and more growth stocks get absolutely hammered over the last couple of days. And yeah, so we shall see how space further perform. The chart obviously still looks very bearish, okay? So downtrend, a lot of resistance here at 15, then comes the $18 mark, no really news until the end of the maintenance period. So it can be still quite hard, but those months are perfect then to ramp up and ramp up your stock, ramp down your average price on this kind of investment, because if they're going to be successful, then you will see a great turnaround. And with that said, thank you very much for watching. I hope you are doing well. We have people from Malta, we have people from Nottingham, we have people from Netherlands, we have people from Portugal, Chicago in the house, Rockingham, yeah, and Hungary as well. Thank you very much for tuning in. Chu Dingo is saying, who else is on the toilet right now? All right, thank you very much. Don't forget to smash that like button, to follow me also on Instagram, and see you tomorrow with Virgin Galactic Friday.